Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition on the Extreme Speed Live. Well, before we kickstart the session, I would love to run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. Your highs are positive feedbacks for me to know that things are quite fine on your end, and then we can kickstart the session. And mind you, if you have any issues or probably you can hear me very well, please let us know in the comment section and see if I can do something from my hand to make things better for you. Thank you very much as you do so, and I look forward to your comments and feedbacks in the comment section. All right. I can see a couple of comments here. No, not much. I expected more from you guys. So I can see 325, Safi, Changal, hello, Carrie. And who else do we have here again? Ikari No Tenesh. A good morning to you guys, and thank you very, very much for this feedbacks. And it's on this note I welcome you once again to another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as we will be delving into the financial market from a technical standpoint using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory for price action today. And well, so far this week we have been monitoring four financial assets on our watch list, which includes the US All Spot, the US Tech 100, the USDJPY, and of course my favorite assets, the XAUUSD, all of which have done pretty well since the beginning of the week, though the last 24 hours has been a little bit of range bound trading activities as market participants digest the US CPI data and wait for fresh impetus for the next directional move. And today promises to be an exciting one as I have simple trading setups that we will be using to guide our trading decisions for today. So I encourage you to stay tuned in so you don't miss out on any of the insightful ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board. I know you will be wondering, what is it that we are doing here on this platform? Well, as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. Well, the session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on the ideas we will be deliberating on today. And it's important for you to also note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section below. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiments today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for so far this week, based on the assets we have been monitoring, we have been focusing on economic features from both the United States and the Japanese economic docket. Though so this week doesn't really have too much high impactful events, so we had to include the mid-tier economic features into our radar so we can have a broader idea or view into what participants will be looking forward to. The beginning of the week started with some series of speeches from Fed officials, and then on Tuesday we witnessed the CPI data, which came in beyond expectations to further emphasize the sticky inflation in the United States. And of course, this had resulted in a positive traction in favor of the US dollar in the last 36 hours. However, the market has been a little bit choppy since then as market participants digest the effect of the CPI data on the market dynamics. Yesterday, we had some speeches too as well from the Fed Reserve officials. We had Goldsby, we had Barr, though I'm yet to have a detailed highlight into what they really said. But by tomorrow, I should be able to give you an update on that one. Then yesterday, based on the USDJPY assets on our watch list, we were focusing on the gross domestic product annualized for quarter 4 from the Japanese economic docket, which of course gave us an insight into the health of the Japanese economy. Surprisingly, the economy contracted by 0.4%, which was way below the market's expectations of 1.4% expansion. And despite this, we saw selling pressure. We saw buying pressure in favor of the Japanese yen. And why is that happening? Don't worry, we will talk about that when we get into the USD JPY. Now, today, Thursday, February 15th, we have a couple of impactful events. Today, we have one high impact event, which is the retail sales data, which is considered as a key economic indicator that measures the total receipts of retail stores representing consumer spending, and its impact on market sentiment is considered to be very significant as it provides insight into the health of the economy and consumer confidence, hereby influencing expectations about future economic growth. Now, looking at the data from the previous month, we saw an expansion of 0.6%, and based on what is on ground, economists are projecting a deficit of 0.1%, which doesn't look promising at all. So we look forward to see what the actual data will be like. Will it be just as expected, below expectations, or even beyond expectations? Then we have other events here which are considered to be mid-tier features, which of course could also influence the sentiment in the market. We have speeches from Bostic. Bostic is an American economist and is currently the president and CEO of the Federal Reserve Bank of Atlanta. He is also a voting member of the Federal Open Committee as well. Then we also had another speech much more later in the day, about 7 hours from now. That's Christopher Wallace. Waller is a member of the Board of Governors of the Federal Reserve System and is also serving as Executive Vice President and Director of Research at the Federal Reserve Bank of St. Louis. Now, these officers here, these officials here, their speeches carries a lot of weight considering their positions and their involvement in the FOMC too as well. Market participants will definitely be looking forward to what they will be saying, especially following the CPI data that came in on Tuesday. And of course, this may give us an insight into the easing cycle of the Federal Reserve for 2024. Now, there are other events here which we'll definitely be looking forward to as well, like the New York Empire State Manufacturing Index, which gauges business conditions for New York manufacturers. Generally speaking, a positive result indicate bullish for the US dollar, while a negative one, of course, projects a bearish sentiment. Now, looking at the data, we have a deficit of 43.7 for the month of January, and economists are projecting a deficit of 15, which is a little bit higher than the previous month. So we shall look forward to see what the actual data will be on that one. Then another important one we want to look out for today is the Philadelphia Fed Manufacturing Survey, which is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. This survey here serves as an indicator of manufacturing sector's trend, and it is related with the ISM manufacturing index too as well. So an above expectation reading is considered as positive for the US dollar, and from what economists are projecting here, we are looking at a deficit of 8 compared to the deficit of 10.6 from the previous month, a little bit higher than the previous one. So things are looking a little bit rosy for the US economy at this point in time. So let's see how the market is going to be anticipating this event. We do know that the anticipation of this event usually has a way of influencing the market sentiment in such a way that it will reveal their mindset through price actions on the chart. So with that being said, and with the information and timing gathered here on the economic calendar, let's dive right into the business. So as usual, the first asset we will be looking at this morning is going to be the US All Spot. Now on the US All Spot, we've had hold on a second. Hold on a second, please. I'm trying to sort out something here. Okay, so on the US All Spot so far this week, we've had quite some interesting situation going on in the market. We've had roller coasters of sells, buys, and then yesterday we also sold as well. And on all occasions, we saw how the market had gained enormous traction significantly through the course of this period. Now, in that regard, we're on the positive side of our portfolio on this particular asset. Now, let's, for the sake of those who missed out on our earlier sessions and who want to be on the same page with us, let's quickly run through how the week began for us in this community and what led to the decisions we made. So at the beginning of the week, we did identify a range for the first 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. Price was more or less range bound, confined within the $76.58 area, and the $76.25 level to emphasize the prevailing uncertainty in the market during that period of time. And usually whenever we identify a range like this, all we do is exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. As at Monday's session, we were looking at selling opportunities, so we sold the retest of the structure, which saw price moved about 75 pips in our favor before the bullish momentum came in. And of course, as we always do here, when price moves significantly in our direction, we move our stop losses, secure the position, and if we did that, if you done that, we were taken out with a reasonable, with small size of profit anyways, not that significant, or at a worst case scenario, break even. Then we saw this engulfing candle spring out of that zone, leading into the breakout of the resistance zone of that range we identified earlier to trigger our first buy position for the week. And since that moment, we have been buying this asset, kept on adding more positions at the breakout of levels such as the $76.80 area, the $77.20 level, and yesterday we saw price break out of the $78 area, though that move did not last long before the bearish momentum came in, taking us out of all our sell positions with a reasonable amount of profit. So it was a very profitable start to the week for us, and during our live session yesterday we did emphasize the importance of this ascending trend line. Remember, let me highlight it for us also we can see. Remember, we did identify the importance of this ascending trend line, which we said will be playing a major role in determining the direction of price action for yesterday's trading session. And we said if price in any way breaches the trend line to the downside, then we will be selling the breakdown of the $77.20 area, and of course had more position at the breakdown of the $76.50 level. Now we had to sell positions in the last 24 hours. In fact, it gave us about, okay, the first sell position is currently running with about 137 pips, while the second sell position is running with about 68 pips in profit, giving us an approximate of 200 pips. And for those of us who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And if you still have your sell position running at this particular point in time, it is high time you moved your stop losses accordingly and secure the current sell position. And if you would ask me, I'm suggesting that anywhere around the key level situated at the $76 area seems most appropriate to move all stop losses to. Remember, we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling, or are there chances that buyers could take over this market anytime soon? Well, following the closure of our buy positions yesterday with a minimum of about 200 pips, we had a sell position triggered, which I did explain earlier, and which the sell move was more or less a response to a larger than anticipated increase in US crude oil inventories, which significantly outweighs a combination of other factors and applies a downward pressure on the US oil prices. Now, yesterday we had we have a report from the Energy Information Administration, which reported that the US inventory surged by approximately 12.33 or 35 million. I'm not sure, I don't have the accurate figure, but it's above 12 million barrels per for the end of last week, that's February 9th ending, which of course is a sign that the supply outmatch the demand. So demand is lower than the supply, hence we have a surge in crude oil stockpile. And whenever there is a high supply, what happens in the market? Of course, price will definitely drop. And as a result of this, the market participant reacted to that immensely with this bearish movement we saw in the last 24 hours. Now, in contrast, a monthly report from the OPEC Plus yesterday projected a 2.25 million barrels per day increase in global oil demand by 2024 and a 1.85 million barrels per day rise in 2025. And this, for me, if you would ask me personally, I'm not buying into this report at all. As we all know, the OPEC Plus may likely want to dish out a narrative that will artificially boost oil prices, increase the demand, and then let price to rise. And because of this, I'm not buying into that report. And if you look at the market too, market participant does not seem to be excited about that report at all, as selling pressure persists in the market. Additionally, the recent escalation of tensions in the Middle East, which has the potential to disrupt supply from the oil-rich region, fails to provide support to crude oil prices as well. Yesterday, we heard of the Israel conducting airstrikes in Lebanon in response to a rocket launched in northern Israel a couple of days ago. So with this market dynamics we are seeing here, the path of least resistance for oil prices seems to be to the downside. However, at this crucial juncture, market participants may turn towards the US economic calendar for potential catalysts, as the data could impact the dynamics of the US dollar, which of course will be affecting the US denominated asset, the US oil. And as a result of this, we need to exercise patience and look out for significant confirmations before jumping into any positions today. So how do we intend to capitalize on the next move? What are the things we want to look out for to guide our trading decisions for today? Now, before we can go into the details, I would like us to quickly have a revisit of the 4 hours time frame where our analysis began at the beginning of the week. And of course, we took into consideration the nature of price action since the beginning of the month of this month of February. And it was quite obvious that the market was bullish, and after connecting the series of higher lows, we had a couple of ascending trend line which we were using to guide our trading activity at the beginning of the week. However, the strong bearish momentum here led into a situation that broke down the ascending trend line, which of course has changed the dynamics of this market from bullish to bearish. And as long as price remains below the descending trend lines, it makes a lot of sense to look out for patterns and structures to sell. However, since price tested this area around the $75.90, or let me say $75.90, I guess. Let me scale back down to the 1 hour time frame so we can see things clearly. So I would like to reveal this on the higher time frame too as well, so that we can reference this on the higher time frame too. So looking at the structure here, let me see what we can do. So we have the $75.90. So I'll just adjust this to $75.90 and then extend this to as far back as the last week Thursday's trading session. Now look at how this level here had played a major role in the last 1 week. As soon as price got into this area, we saw how it became difficult for sellers to break through the structure, as every attempt by sellers to break through was met with strong resistance from the buyers. And the same thing has been happening since today's session began. Price got into the structure and we saw buy pressure again resume from that particular area. Now, considering the strong bearish momentum that brought us into this current level, the question at this juncture now is, due to this buy pressure here, are we likely going to see price do a retracement back into any of the structures like the $76.50, or any of this ascending trend line to incite a downtrend move, or are we going to be seeing a downtrend continuation pattern form around here, where the breakdown of the $75.90 will be all we need to join a bearish move to the downside? Now, to answer this question, we will scale down into the 1 hour time frame, where we will be seeing things more clearly here. Now, zooming into where our center of focus is for today, look at what we have here. Price action is currently trading below the range below the support line of the range we identified at the beginning of the week, around the $76.26 level, to still maintain a bearish bias around this particular area. Now, with the way things are going here, if the buy pressure around the $75.90 level persists, we may likely see price continue to the upside. Now, look at what happened at the beginning of the week. When price got into the zone, we saw buy pressure resume from that area, and in the last 12 hours or so, price action has been doing the same thing here. Buy pressure resume from that particular level. So will this be a platform for new buying opportunities, or will it be a platform that will incite more selling opportunities? Now, if I consider the continued selling pressure since yesterday, I'm looking at adding more sell position at the breakdown of the structure, as a breakdown would have taken out all the buy positions there, giving us more opportunity to join the decline to the downside. However, if the buy pressure persists here and the breakdown turns out to be a false one, well, we'll definitely be seeing a potential reversal pattern, something like this, where the $76.26 level will be the neckline of that reversal pattern, and a breakout will hereby validate it to incite an uptrend move. So buying above the $76.26 level makes a lot of sense here, and of course look out for more opportunities at the breakout of the $76.50 area to maximize the potential of that bullish move. So that is the only condition that will make us want to be buying this asset. And mind you, due to the strong bearish momentum we saw in the last 24 hours, for us to buy, we will need confirmations to happen, like a breakout and retest of structure to join that uptrend move. But if you are part of the profitable journey since the beginning of the week, you can afford to test waters, leverage on some of the profit we had made to test waters around that particular area. Now, as it is right now, I personally have a sell stop order triggered at this point in time, and let's see how it will go. If it continues, fine and good for us. But if we get taken out of the sell position and price goes ahead to break out of the potential neckline at the $76.26 area, then let's join a bullish move to the upside. So our center of focus for today is between the $76.26 level and the $75.90 area, where, depending on the breakout, the direction of the breakout will be giving us an idea into where price will be going for today. So I encourage us all to mark out those levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on these assets for today. If you have any questions, feel free to let me know in the comment section below. All right. So I see a couple of comments here. Just greetings from Wari Sadar. Good morning. TRH. Good morning to you. And Kindovan. Good morning. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move right into the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And what a tremendously profitable week it has been for us on this particular asset, as we've had buy positions, we had sell positions, and of course lately we also added another buy positions to maximize the potential of trading opportunities in this particular market. And as a result, we are actually on the positive side on our portfolio on this asset. Now, for those of you who missed out on our earlier sessions, let's quickly run through this together to see what has led to the decisions we made through the course of this week. Now, at the beginning of the week, it was a long consolidation phase as we saw price action confined within the 17,970 and the 17,920 area to emphasize the level of uncertainty in the market at that particular point in time. And of course, this did not come to us as surprise. Remember, I mentioned at the beginning of the week that we are at an all-time high, and usually when price gets into this area, there is always some psychological peculiarity that comes with it. And when price gets into a new high, it usually takes some time for price to acclimatize with that particular area. So the fear of losing money sets in, and those who had capitalized on the bullish momentum that got to that level may at some point want to start taking some profit off the chart in the fear of not losing if price action crashes. And this usually reflects on the chart as retracement moves, consolidation phases, and of course choppy market conditions. And this was exactly what happened at the beginning of the week. However, considering the fact that we had a range, we had no other choice than to exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. However, the first hours of the week was more of giving us signs that buyers may likely be taking over the market, as price action spent most of the time around the resistance line. And with our buy stop order at the resistance zone, we had our first buy position triggered a couple of hours into the New York session on Monday, and then we added more positions at the breakout of the $18,000 area. And of course, that momentum did not last long before the bearish momentum came in. And with all sell positions moved accordingly, we were taking out with some small profit on that particular one. However, there were more positive sides to this market, as we remember that at the beginning of the week we had this couple of ascending trend line as a yardstick to guide our trading decisions for the week. And we talked about if price ever breaches this trend line, that will welcome selling ideas. And to position ourselves for selling opportunities, remember we had a sell stop order sitting right below the 17,920 to capitalize on the bearish move. And since then we have been selling. I think for 2 days we sold this asset, added more at the breakdown of the 17,800. And did we add more? Okay, we didn't add more. So we had 2 positions as at yesterday. And during our live session yesterday, price action was actually around here. Let me show you. So price action was around here, already broken out of the 17,660. Do you remember that? So we already saw price broke out of the 17,660. And one thing we said here is that we might likely be seeing the beginning of a retracement of the bearish momentum that started a couple of days ago. And as a result of that, we decided to have our neckline of this potential reversal pattern right around the 17,660, where we said since price action is broken out of the structure, let's wait for price to come back to retest the structure in an attempt to join an uptrend continuation. And this was exactly what happened. A couple of hours into the New York session, price came back. In fact, we saw price retest that area for about 4 good hours, so it gave us enough room to be part of this uptrend move, and we saw price climb up, adding more position at the breakout of the key level at the 17,800. So at this point, you should be having a minimum of 2 buy positions running in profit, where the first buy position is running with about 170 pips, while the second buy position is running with about 25 pips in profit. So we have approximately 200 pips already. Remember, a couple of days ago we were running about 200 pips on this asset, on that bearish momentum we took. So on the USTech100, we are quite profitable on this particular asset, and for those of us who capitalize on this move, well done and kudos to you for being on standby. Now, as it is right now, since price action has moved significantly in our favor, all we want to be doing right now is to move all our stop losses and secure the current buy positions. And from my own perspective and based on the current structure, I'm of the opinion that anywhere below the 17,800 and the previous low, that is around the 17,750, makes a lot of sense to move all our stop losses to and secure the current buy position. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Remember we talked about this strong bearish momentum to the downside yesterday, and in fact the bullish momentum we're seeing so far may be considered to be a retracement of that impulsive bearish leg. Now the question at this point in time is, how far will this bullish momentum go before the second leg of the bearish momentum will happen? Will it get to as far as the 17,920 or the 17,970? Well, we don't know, but if price gets into any of these areas, we definitely want to be moving our stop losses further, securing more positions while we exercise patience and wait to see how price will react to that structure to determine what our next line of action will be. Will price retest it? Will selling pressure resume there to incite a sell-off, or will price break out of the structure to welcome more buying opportunities? Now, to make our trading decisions easy for today, we are going to be acknowledging the series of higher lows here in the last 48 hours as a yardstick to guide our trading decisions. Now, if we bring out our line chart and connect the series of higher lows, we have a beautiful ascending trend line to work with for today. Now let's bring back our candle chart and let's readjust the touches on the pivot low, and we should be having something like this. I think this is better. So we have a beautiful ascending trend line to guide our trading decisions going forward. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this particular asset. So we shall continue to look out for more opportunities to buy this asset since price still remains above the ascending trend line. Then we could add more buy positions to our existing trade if price action can go ahead and break out of the, let me see, 17,860. That's another psychological level, and you can see how this level has also played a major role in the last 48 hours or so. So let me bring this in right here. Is it right here? I think it's right here. Yes. So we have the 17,860, right? Okay, so we have the 17,860. So I encourage us all to mark out these levels on our chart, as we will be needing it as a reference point to add in more buy position if price action goes ahead to break out of that structure. So this is what we will be using to guide more buying opportunities in this market. However, if price action decides to do the opposite and then drops below our key level, you can see how the key level beautifully shares a confluence with that ascending trend line. Now, a breakdown of our key level will break down the ascending trend line, which will further emphasize that the trend line may no longer have the capacity to negate the bearish attempt anymore, hereby welcoming selling opportunity, which could be the beginning of the second leg of the bearish momentum that started on Tuesday. So a breakdown of the 17,800 should be all we need to join a bearish move to the downside. So let's mark that level out as well, and you can see how crucial this ascending trend line is in guiding our trading decisions for today. So what this simply means here is that our center of focus for today's New York session is right within the 17,800 and the 17,860, where depending on the direction of the breakout will give us an idea into where price is likely going for today. So I encourage us all to mark out this level, as we will be needing them as a reference point to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, and due to the limited time, we shall take the next 5-10 seconds to check if there are any questions before we move on to the next asset on our watch list. How are you, Amazing G? Hello, Hayes. Hello, Varine. Good morning to you guys. Glad to have you around with us this morning. So I hope we all marked out these levels accordingly. And if you have done that, well done to you. So we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset on our watch list for today is the USDJPY. What a beautiful setup we have on this particular asset. And before I even go further here, I want to let us know that it is high time we safeguard all our current sell position as the price action breaches the ascending trend line we identified during our live session yesterday. The worst case scenario, move your stop loss to the entry point before we go into any further details right now. Please do that right away, so that because we're beginning to see some interesting setup unfold which could move price against this particular direction. Now, before we go into the details here, let me quickly run through how the week began, especially for those of us who missed out on our earlier sessions, so that they can also be on the same page with us. So at the beginning of the week, it was more of a consolidation phase. Remember, where we saw price action initially confined within the 149.325 and the 149.080 area, giving us an insight into the prevailing uncertainty in the market at that particular point in time. Now, in addition to that, was this descending trend line after capturing the series of lower highs since last week Friday, and this was giving us an idea that probably price may go south, that we may be seeing some profit taking activities which may incite some bearish expectations. However, despite the bearish expectations here, we did emphasize that if price action in any way breaches this descending trend line, this could welcome buying opportunity and incite the second leg of the impulsive move that started yesterday. And to capitalize on that bullish opportunity, we did identify this level at the 149.200 area, which shares a confluence with that descending trend line, to maximize that move. Then price broke out of that structure to welcome our first buy position for the week, and since that moment we have been buying, adding more positions at the breakout of structures such as the 149.325, 149.475, and of course on Tuesday, following the US CPI data, we saw this engulfing bullish candle that broke out of our key level at the 149.600, added more at the breakout of the 149.700 as price action tested the 150 new high at the 150.880 area on Tuesday's New York session, later in the New York session on that day. Now, prior to our live session yesterday, we did notice that the Bank of the Japanese yen was attracting some buying activity, which led into a consolidation phase. And if you were part of our live session yesterday, we did mark out this range between the 150.870 and the 150.400, giving us a beautiful range to work with, where we were looking forward to a potential uptrend continuation if price action break out of that resistance line, and of course this never happened. Now, in addition to this range, we did connected the series of higher lows, giving us an ascending trend line. This one right here you've seen was the ascending trend line we did spotted here yesterday, and we said it shall be playing a major role in guiding our trading decisions. And of course, when price remains above our ascending trend line, we want to be looking out for patterns and structures that support the idea of buying, and as a result we had a buy stop order sitting above the 150.870, but price never even got close to that area. Then we also talked about the possibilities of sellers coming in, and that the only condition that will make us sell this asset is for price to breach and break down the ascending trend line. And of course, we saw price break down the ascending trend line, and we said if this happens, we shall position ourselves below the support line at the 150.400 to capitalize on the bearish move. And this is exactly what has happened. If you did capitalize on that opportunity, you should currently be running with about 40 pips in profit at this point in time. And remember what I said, the first thing I said here on the USDJPY is to move your stop losses, as we are at a crucial juncture in this particular market. As you will see here, despite the Japan's economy showing a contraction in Q4, the Japanese yen, despite this, witnessed some increased buying interest, possibly due to concerns over Bank of Japan's intervention in the FX market and escalating geopolitical tensions in the Middle East. And this could be interpreted as a retracement of the initial bullish movement seen earlier this week. Now, remember yesterday I did talk about the verbal remarks from a policymaker in Japan. I can't remember it. I think it's Manoto. I'm not very sure I got that name right, where it did emphasize that the Bank of Japan is ready to intervene in the forex market if the value of yen continues to drop. And this, of course, has sent a ripple of fear into the market, resulting in market participant dropping the US dollar, maybe in the meantime, to try to understand the dynamics of the market. And this has resulted in a potential retracement move, as you will see here. Now, with the situation we have here and the possibility of delayed Fed rate cuts, which may continue to support the US dollar and restrict any losses for the USDJPY, the crucial question at this juncture is, how far will this current downward momentum extend before another upswing takes hold? Now, to be able to navigate this current structure, what I did this morning was to take into consideration the impulsive move that happened on Tuesday, and then let's project where it is likely for the retracement phase to end before the next momentum will happen. And to do this appropriately, we need our Fibonacci retracement tool. And after running the retracement tool right through the impulse leg, you know where we aim. Our golden zone area is between the 50 and the 78.6%, which interestingly falls between the 150 and the 149.600 area, which happens to be our key level. Now, in addition to the zone I just identified here, is a newly identified ascending trend line to capture the recent impulsive move, and we have something like this to work with. So this trend line here is the major one we will be using for today. So to emphasize its importance, I would like to thicken it a little bit and then reduce the thickness of this one, as it is no longer relevant at this juncture. Now our center of focus for today is going to be within our golden zone area, that is between the 150.00 and the 149.600 area, where depending on how price reacts to this area will determine what our next course of action will be. Now, to continue buying these assets, I want to see a reversal setup happen here. It could come in the form of a double bottom structure, head and shoulder pattern, falling wedge, whichever case it may be. Once we identify this, let's quickly mark out the neckline of this pattern and then buy the breakout of the neckline. And then if price continues to climb, we have the 150.400 and the 150.870 area to maximize the potential of the bullish move. Mind you, price goes to drop into the key level before the reversal pattern happens. So let's be very, very mindful of this area. Let's see how the market will react. A reversal pattern here will be all we need to join the uptrend continuation. So we are at a very crucial moment in the market, and this could take about 2, 3, 4 hours before the formation happens. So let's be on standby to capitalize on this move. And for those who still have the sell position running, I did mention earlier that we should move our stop losses due to the current sensitivity of the area we have right now. But if price continues to drop and it breaks down the 149.600, we will be adding more sell positions to our existing trade. So mark these levels out and let's see how the market is going to play out going forward. If you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 5 to 10 seconds off to see if there are any questions before we go into the final assets on our watch list for today. All right, I can see hello comment here. Oh, I can see Aki88. Aki88, it's been a while since I saw you. Trust you're doing very well. How are you doing, Haki88? Okay, I can see Keno Delgani. I'm not sure I pronounced that correctly. Please permit me if I didn't. Glad to have you around with us. Nato, good morning to you. Freedom Me Picks, good morning to you. Thank you very much for the thumbs up. And oh, I see you, Aki88. Thank you very much. I'm glad to hear from you this morning. I'm doing very well. Trust you are doing very well too. I'm glad to have you around today after such a long time. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving into the final assets on our watch list for today. So the final asset on our watch list for today is of course my favorite asset amongst the assets on our watch list, and that is the XAUUSD, popularly known as the gold spot. And of course, all our sell positions from Tuesday's trading session have been closed, yielding over 700 pips in profit as the gold prices continues its sideways trading pattern, remaining within a divine range over the last 48 hours. As you will see here, price action has really been confined within the $1,995 level and the $1,988.50 area to emphasize the prevailing uncertainty in this market. Well, before we go into the details here, let me quickly take us through how the week began with us in this community, especially for those of us who are joining us for the first time. Let's give them the privilege of being on the same page with us. So at the beginning of the week, it was more of a range bound trading activities, which was characterized with a little bit of selling intensity, as we saw price action confined within the $2,027 area and the $2,022 area, just oscillating right around our key level situated at the 2025. And of course, you know how we use our key levels in this community. As long as price remains below the key level, we have no business buying that asset. Now, with the situation we saw here on Monday, and with the continuous selling pressure around this area, considering the character of the week of these candles, we decided to position ourselves below the support line of that range to capitalize on our first sell position for the week. Now, we saw price break down the $2,022 area, and in fact, we took advantage of that move. Price moved about over 100 pips in our favor before the bullish momentum came in. And of course, you know how we move our stop losses, especially when price moves significantly in our favor. If we did that, price would, I had a minimum of 50 pips on that position before the bullish momentum came in. And right here on Tuesday, we decided to buy if price action breaks out of the $2,027 area. Remember, this level was a barrier for buyers at the beginning of the week, and we were considering the fact that since price action is trading above our key level, it makes a lot of sense for us to buy above that structure. Then we bought, we saw price move about 50-60 pips thereabout, but unfortunately for buyers, selling momentum came in following the super hot CPI data that came in beyond all expectation, resulting in a positive traction in favor of the US dollar. And remember that we had a sell stop order sitting below the 2025, which got triggered. We added another one. Remember, we had stop losses. We talked about this on Tuesday that we will be having stop losses right below the structures. And of course, we saw 3 sell positions running, giving us over 700 pips in profits, and this is dependent on where you place your stop losses too. And once again, congratulations to everyone who did capitalize on this trading opportunity. Now, as it is right now, price action is currently range bound as we have a confinement within the $1,995.50 level and the $1,988 area. Now, the increasing consensus that the Federal Reserve will maintain higher interest rate for an extended period of time has reinforced by the unexpectedly high US inflation data released on Tuesday continues to act as a barrier for the safe haven assets such as gold. Now, meanwhile, the US dollar appears to lack strong bullish conviction due to the ongoing decline in the US Treasury bond yield, and this coupled with the apprehensions regarding geopolitical risk arising from conflicts in the Middle East provides some support to the safe haven asset such as gold. As a result, exercising caution before initiating any new bearish position is warranted. Now, looking ahead, market participants are turning their attention to the US economic calendar today for potential mid-tier economic indicator, and of course the retail sales data. We did talk about this earlier, and for fresh impetus today. Now, in light of this development, we will exercise patience and rely on our current structure here on the 1 hour time frame to guide our decisions going forward. Now, you know how we do it in this community. Whenever we have a range like this, we usually exercise patience and wait for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, looking at the structure here, this structure could transition to either a reversal setup or a downtrend continuation. Now, I'm beginning to see a potential head and shoulder pattern, which more or less is not really an head and shoulder, but is similar to an head and shoulder, which technically is a reversal pattern to work with. Now, if we consider the bearish impulse leg like this is giving us something like the left shoulder, where this gives us something like the head, and then we have something like this, the right shoulder, which of course you will see the lowest point here didn't get to as low as the previous left shoulder, giving us signs that buyers are gradually gaining momentum, where we shall be having the neckline of this reversal pattern lining up with the resistance line of this range. Now, one other thing that also buttresses this reversal pattern is the fact that since yesterday's trading session, price action had consistently found higher lows in the market, which further emphasized that buyers are gradually gaining momentum behind the scenes. And whenever we identify a series of higher lows like this, we want to mark out the connect the series of these higher lows to give us an ascending trend line to work with for today. Now, as long as price remains above this ascending trend line, we have no business selling this asset. So as a result of this, I had a buy stop order above the $1,995.50 level, and it appears it has triggered, but I still think that the buy position is still struggling. As you will see, we have a shooting star candle somewhere around here, which reveals that sellers are still present around this area. So as a result of this, it is necessary that we have a wider stop loss anywhere below the support or below the ascending trend line. Dovetailing to about 45 to 55 pips stop loss will make quite a lot of sense for this position. So if price still remains above the structure, we maintain a bullish bias, and let's see how far it will go. However, if price action breaks down the ascending trend line today and retest the structure, then I'm of the opinion that it is high time we get ready to start selling the XAUUSD, and of course have more sell positions at the breakdown of the $1,988.50 level to maximize the potential of this bearish move. So you can see how crucial this ascending trend line is and how it's going to be playing a major role in guiding our trading decisions for today. So I encourage us all to mark out this level and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my simple view on the XAUUSD today. Our center of focus is just right around that ascending trend line, and depending on how the market participant reacts to it today will determine what our next line of action will be. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on and before we round off on today's XAUUSD Live technical analysis session. All right. So in the absence of no questions, we have come to the end of today's XAUUSD Live technical analysis session. It has been a wonderful moment with you guys. I really love the energy in the house from Aki88, Arjun 820, Man 5351, Roro Zoom, Mexico 325, Ginono Mix, Nest 57, Fredo Mix, Nato, Aki88, Varin. All of you are just too wonderful. I really appreciate your engagement in the comment section. And so far today, we were able to revisit all of the assets on our watch list for this week, which includes the USOILSPOT, the USDJPY, USTech100, and finally the XAUUSD, where we were able to identify simple trading setups that we will be using to guide our independent trading decisions for today. And I do hope you marked out these levels accordingly as we illustrated during the course of the session. And if you had done that, well done, and kudos to you for marking this out, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you had marked them out, just let us allow these structures to mature, and trust me, let's trust the analytical approach, and by tomorrow we shall be analyzing this together again. And for those of us who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you've done so, that's good. I look forward to seeing more of you in our subsequent edition. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So it's on this note I wish us all the best of luck today. Looking forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time prepare for the last trading day of the week, which comes with some psychological peculiarity as market participants round off their trading activity for the week. And of course, this always bring in some significant traction for us to capitalize on. So you don't want to miss out on tomorrow's session. So set your alarm, set it on your calendar, and don't miss out on that session. So on this note, I wish us all the best of luck again. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.